anybody have any questions that came up over the weekend? Anything over chapter 4 on journalizing or posting? I was very happy to see, I think 10 of you finished the homework completely for chapter 4. So that was some really good news. I think the rest of you maybe half started it. So happy with that. It's always a good thing to be ahead of the game. If you don't have any questions, then I'm going to go ahead and get started. Ulysses, thank you for the good morning in the chat room. Let me share my screen. And here is the agenda. Let's make sure we have it up here. Here's the agenda. We're on the second day of chapter 4. So just kind of backtracking a little bit. Last time we were here, we learned real life documents that are used to record accounting transactions from the smallest company up to the biggest mega company. On the larger companies, usually this is done electronically, but the same characteristics and the same logic applies, whether it's a small company or a big company. So just kind of backtracking, last time we were here, we learned that a journal was an economic diary that's used to record historic transactions. It's an economic diary of all the financial transactions that happened to us over the company's life. And we learned that although T accounts were great learning tools, they're kind of messy and they don't really work in a historical sense to save data very well. So we learned about rules for journalizing, and I'm hoping that you guys practice that this weekend. But the journal, although it kept a great diary, does not keep track of the balances. And so we practiced another process called posting, which is how we transferred the amounts from the journal to the ledger. And we had to use those post references. In the ledger, we put journal page numbers, and in the journal, we cross-referenced ledger account numbers. And we practiced that for quite a while in class. And then at the very end, the last step, which you guys have done in a previous chapter, is we created this trial balance. And the whole purpose of that trial balance was to ensure that debits equaled the credits. We still are going through the same mental mechanics when we look at a transaction. We ask ourselves what accounts are affected, and we know from previous chapters that a minimum of 2 are affected. That's called double entry accounting. We learn to ask or look at that transaction in terms of increases and decreases. And then we learned about the 5 rules of debits and credits way back in chapter 3, but now we were applying those to journalizing transactions. So what we're working towards right now is mastering the accounting cycle. So I want to bring up a PowerPoint that had the accounting cycle in it. You guys have this in different places in your textbook, but this is what this class is working towards. We're working on mastering the accounting cycle. So step 1 was we analyzed and classified transactions. That was chapters 2 and 3. And then in chapter 4, we learned to journalize and post. Okay, and we also created a trial balance that becomes part of this new thing we're going to talk about today called a worksheet. So these are chapter 5 transactions that we'll get to today. We'll learn how to prepare a worksheet. You already know how to do financial statements, so we'll refresh your memory with that. And then today we're going to talk about something called adjusting entries. But our goal in this class is to master the accounting cycle. So someplace in your notes, we need to get those 9 steps down. Giselle, I don't know if you're able to take a screenshot of that, but that would be something that we might want to post in the chat room. Everybody does have access to the PowerPoints, but the PowerPoints is so full of other information that it would be great if we're able to take that one slide and maybe stick it in the chat area. Any questions on where we're headed? Now we're going to complete this accounting cycle for 2 types of entities. The first type, which we're focusing on right now, is a service-oriented business. Think about the place you go to get your haircut, or maybe the gym that you go to, maybe a personal trainer in the gym that has started his or her own business. So in the first 6 chapters, we work on this accounting cycle for a service-oriented firm. And then the last half of the class, we're going to switch it up to be a merchandising firm. And a merchandising firm is a company that sells goods instead of services. So most of the stores that you go by when you're out and about, a Best Buy or a Target, those are merchandisers. That's going to be what we cover the second half of class. And so having said that, I usually start by pulling up our schedule to make sure that we're all on the same page. So you'll notice that today we're going to do a couple exercises out of chapter 4, and then we're going to go immediately into chapter 5. We'll review chapter 5 on Tuesday, tomorrow, and I'll possibly introduce chapter 6. Chapter 6 is one of, I think, the easier chapters in my regular classes. We only spend a day on it also. And then you guys have your second exam on Thursday. That was the reason for me begging you guys to try the chapter 4 homework over the weekend to kind of get that out of the way so that this week we can focus on chapters 5 and 6. And once we take that second exam, you guys will be halfway through a very fast-paced summer course. Discussion posts. I think all of us can use a little bit of inspiration at this point of the semester. So I hope you guys will all take a look at the discussion posts this week, hopefully early in the week. Let's see, I think I opened that somewhere on here. Here it is. It's about a football player named Inky Johnson who was playing for a Tennessee college team with hopes of going into the major leagues, the NFL specifically. And you'll hear him talk about some circumstances which changed his life. And I think it can all kind of spur us on. I think sometimes when we get so wrapped up in these fast-paced summer classes, we kind of lose focus on the journey that we're on. And so I'm hoping that discussion post will be motivational for you. So it takes about 7 minutes. I would get that out of the way so we can focus on the accounting topics. And I think we're ready, unless I hear any questions, we're ready to jump in and finish up chapter 4 on errors. So does anybody have any questions? You can either unmute yourself or you can put them in the chat room. Okay, so what we haven't yet talked about out of chapter 4, it's kind of back up. What we have talked about, we've talked about journalizing, posting, how to create the trial balance. And what we haven't talked about yet, and this will happen to all of us, is what do you do when the debits don't equal the credits, right? And I'll never forget being in one of my first accounting classes that used some accounting software. And I was so proud of myself because I didn't encounter any errors. I was very meticulous and I did the problem right. And I probably spent 3 to 4 hours in the computer lab. And I was so proud coming out of there that I made the mistake of telling my professor, I did my homework and I didn't have any mistakes. And so he asked me for at the time it was floppy disks. And I gave him my floppy disk and he purposely went in and made mistakes and said, here you go, you need to learn how to fix these. And I thought, are you crazy? At the time, I thought, are you crazy? After all that time working to get it meticulously right, you purposely make errors on my files. And he was trying to teach me a lesson. I appreciate it now that I'm older. Part of the challenge of accounting is your ability to find your own mistakes. And later when you become an auditor, if any of you are thinking about that field, maybe finding other people's mistakes. So what do you do in the trial balance if your debits don't equal your credits? Okay, so if you're keeping notes, I would call this finding errors. And the book does a pretty good job of explaining it, but I want to spend some time to go over the process with you, and then we'll jump in and get our hands dirty because sometimes the correcting journal entries confuse students. So we're going to spend part of our time wrapping up chapter 4, and then we'll jump into chapter 5. So if your debits don't equal your credits, the first thing you want to do is you want to look for normal balances. Okay, previously in class, we discussed what a normal balance was. And a normal balance is the side that receives the plus. So for example, all assets have debit balances. So the first thing I would do is I'd scan that trial balance and I would make sure that all my assets have debit balances. If I find one that has a credit, chances are I've made a mistake and I could go zero in on that specific account. So I'd make sure that all my assets have debits and that the other things on the other side of the equation have credit balances, except for the drawing, which had that contra balance. And we know expenses have debit balances. That would be the first thing I would do, is I would look for normal balances. Second thing I would do is I would refoot the trial balance. In other words, if your debits don't equal your credits, take another few minutes and refoot it, either with a calculator or with Excel, because sometimes, especially if you're me, you can make a simple transposition error. So the way that you can tell pretty easily if you have a transposition error, that means where you flip the digits, or you have a slide error, is the difference will be divisible by 9, right? So if you're doing that trial balance and you don't foot, and your balance is off by 9, or something that's divisible by 9. In other words, your difference is 9 or 18 or 36, something divisible by 9. You've either transposed two numbers or you've made a slide error. So I want to make sure you understand both of those. Whoops, let me get a new file up here. That was one of our students' academic plan there. So here's what that means. It means that if I write a check for $237, and because especially I have a small case of dyslexia, I'm very likely to switch digits, which means I write it down in my ledger as 273. You see how I flipped the digits? The way you can find that is if you take the difference between those two, and I'm going to get my calculator right here, 237 minus 273, my difference is 36. Since that number is divisible by 9, I can look specifically for that transposition error. So that's one thing I want to point out. If your difference between your debits and credits is equally divisible by a factor of 9, chances are you've transposed the number or you've made a slide error. So what I just demonstrated here is what we call a transposition. And again, I'm writing sideways. I'm sorry, it's a little messy. And then a slide error is where the decimal point slides. For example, this just happened to me last week. I wrote a check for $30 to a church, but in my checkbook, in my ledger, I wrote down 300. Okay, that's a slide error. The decimal point slid. And the difference between those two will also be divisible by 9. In other words, the difference here is $270, and that's easily divisible by 9. So that just kind of gives you some places that you can zero in on making the mistake. So let me write that down. That is a slide error. Okay, so we're talking about locating errors right now, and then in a moment we'll talk about how to fix them. I think the harder part is locating them. And then you guys that are in the class know that if you can't find a mistake, you can always contact Giselle or myself, and you always have us as a backup to help find your mistakes. All right, so let me get rid of that document and this educational plan here. And the other thing you can do, after you've looked at the normal balances, after you've checked the footings, after you've checked to see if your number is divisible by 9, that means transposition or slide error, you can look for double the amount or half of the amount. And why that would happen is sometimes we post a debit but not a credit, or vice versa. And so it's one thing to locate the error. Now we want to talk about, well, how do you correct it? Okay, locating it often is the hard part. Correcting it is more of the challenge. So any questions on locating the errors? Okay, then we're going to talk about correcting errors. And I think this may have been one of the more challenging problems on the homework. So your handout says, finding the error is the hard part. Correcting it is much easier. There are 3 methods used to correct errors. So I want to get those 3 methods into your notes somewhere So I'm going to go back to just this chicken scribbles. There's 3 ways to correct your error, and I'm going to demonstrate all 3 of them to you on the homework. The first one is called the ruling method. So I just want these words in your notes, and then we'll go back and talk about each one. The ruling method only works if you haven't yet posted. Okay, so that's the negative part of the ruling method. It only works if you discover the error prior to posting. So the vast majority of the time when I make mistakes, I find it after posting. So the ruling method is optional for us. It only works if you haven't posted. The other 2 that I'm going to show you work all the time. So the other 2 is called the correcting method, and this is the one that your book uses most often, the correcting method. And then the third one is called reverse and correct. And we're going to get all 3 of them. We're going to practice all 3 of them on our first homework that we're going to be doing today. Again, the disadvantage to the ruling method is it only works if you catch your error prior to posting. The last 2 work all of the time. So get those 3 numbered items into your notes, and then we'll go try an example so that we can get our hands dirty. Okay, so chapter 4, day 2. I sent you guys an announcement asking you to download 2 files for today. Chapter 4, day 2, which is what you're looking at on my screen. And then chapter 5, day 1, which we'll eventually get to. So go grab that. This is chapter 4, day 2. These are all in the modules link. I'll give you a minute if you need to grab them. And while we're waiting for people to possibly download a file, does anybody have any questions? Okay, then I'm going to use this as an example to demonstrate all 3 methods. They only want you to do the correcting method on this one, but to get this into your notes, sometimes we learn as we go and we talk through a transaction to get it into our notes. I'm a firm believer in getting our hands dirty. So we're going to read this, and then you're going to see me correct this 3 ways. I'm first going to use the ruling method. And that would be appropriate if it's discovered prior to posting. Then you'll see me correct the same error using the correcting method, which is what your book is going to focus on. And then you'll see me correct this error one more time using the reverse and correct, which is foolproof. It works 100% of the time, and it especially is useful when we get into more complicated transactions. So if I don't have any questions, let's read it. And then we'll try it. It says, and let me make this bigger so we don't strain our eyes. It says that on June 10th, an employee of Williams Corporation mistakenly debited telephone expense rather than utilities expense when recording a bill of $2,000 for the May utility service. Okay, so think about, it's probably like an electric bill or a gas bill. And so their mistake was they weren't paying much attention and they accidentally debited telephone expense. The error was discovered on June 30th is what it tells us. So it wants us to go in and fix it. Okay, so I'm going to use 3 methods. The first method is what we call the ruling method. And we mentioned this can only be used if it's discovered prior to posting. Okay, so there's that. So assuming I found this prior to posting, the ruling method is really easy. All you do is make a simple line through the mistake. Now, I want you to notice the credit to cash is okay. They messed up on the debit here. So if you're using the ruling method, all you do is you put a single line through the error, and then you go back in and write in what account should have been used. Like this. You can only do it when you discover the error prior to posting. Then the other thing you would probably do, especially if you're in a situation where there's various people making journal entries, I would personally initial this. So if somebody came back, they would know who it was that made that correction. So my name's Debbie Johnson. You'd see me end this with a little DJ, so that if anybody wanted to come and talk about the error, they could ask me. I think I saw Ulysses with a question.
Yes, Professor Johnson. How do we cross the telephone expense on Excel?
So let's see. I think you can take your draw tool here, right here, and click this black line. And I think, let's see if it allows me to do it. I think you can go and make an X through it. I always use a pen. Anybody else want to answer that? Draw with, I have a touch screen also.
Yeah, my Excel lets me do it with the draw.
Oh, Giselle, let me stop sharing my screen. Do you mind sharing your screen and showing Ulysses how to do that? Okay, yes. I can see your screen.
With this draw,
okay,
you can pick any color.
Okay.
And mine is also touchscreen, but you can use the mouse and just.
Perfect.
And if you messed up, you could just go back
and hit the undo button. Mm-hmm. Perfect. Thank you very much.
Thank you. I was able to do it. Thank you for all the help.
Good. Glad to hear that. Okay. That was a great question. Anybody else have any questions? Okay. So ruling method, easy, piece of cake, no big deal. Only works prior to posting. Second one, unless you see another question, Giselle, in the chat, maybe, no? Okay. Second one is called the correcting method. This is the one the book emphasizes. So we're going to assume that that same mistake was made, but I'm going to go back and get rid of this correcting thing that I did here if I can. Okay. So correcting method, which is what the book emphasizes, you can use it anytime. And the correcting method focuses on just correcting the specific error that was made. So again, the cache part is okay. This is the wrong part. So to get rid of that wrong entry, you do the opposite. In other words, if I were to look at telephone expense right now, I have 2,000 sitting in there that shouldn't be there. So I want telephone expense to be 0. So the way that you would fix that is you would credit telephone expense. Let me see if I can go get a red color. You would credit telephone expense to get it out of there. Notice how that brings it down to 0. And then the offset to that, because we know that we have to have a debit and a credit, the debit would be to the proper account that you should have used in the first place, which is utilities expense. So that's what it would look like visually. We know that we have to journalize transactions, that the only way to get transactions into the book is through the journal entry process. So I'm going to go here and I'm going to do what I just did in T accounts through a journal entry. So notice I have to list my debit first. And by the way, we would date this on the day that we discover the journal entry, which is June 30th. Oops, 30th. So if you look at my red scribblings over here, what I did is I debited utilities expense and I credited telephone expense. And that is going to catch an auditor's attention because expenses are never credited unless you're fixing an error. So I would leave a really good description about what that entry is doing, because guaranteed it's going to flag an audit. Expenses are never credited unless we're fixing an error. So I would leave a really good description, and my good description might say something like this: to fix error recorded on June 10th, where a utility bill was accidentally charged to telephone expense. Something like that. That's called the correcting entry. Notice we didn't touch cash because cash was okay. It didn't need to be fixed. So that's kind of strange. We haven't seen a journal entry yet where we credited expenses. So we want to be really good and leave a detailed description. And again, Connect is not going to ask you for descriptions because they have no way of validating it to tell whether it's correct or not. Any questions on that? Okay, then the third method, again, we're demonstrating this for the lecture, is called reverse and correct. It always works, and it is especially good, or I'll put especially well suited for complicated transactions. For example, think of your payroll checks that you get. I don't know about you guys, but when I get a payroll check, there's probably 8 deductions on there, right? That's a fairly complicated transaction with things going every which way. So reverse and correct would be a technique you can use, which will reverse an entry, which means flip it, undo it. And then correct means do it the way it should have been done in the first place. So again, going up to this initial wrong journal entry. The way that we would fix this using the reverse and correct technique is we would totally reverse this. So again, you do it when you discover the error. So I'm going to do this on June 30th. And to reverse that error means do the opposite. I would debit cash and I would credit telephone expense for the 2000. And if you were making T accounts, what you would have just done is you would have taken those balances back to 0. And I would leave a really good description to reverse out an entry where a utility bill was accidentally charged to telephone expense. I'm only half done. And then I'll go back and answer any questions. So I've just set my accounts back to 0. And then immediately after that, now that it's reversed out, now that you've taken the accounts down to 0, it's almost like erasing the transaction that happened. Now you would correctly record it the way it should have been done in the first place by debiting utilities expense and crediting cash. And I would leave a really good description to correct the June 10th transaction after reversal where a utility bill was accidentally charged to telephone expense. And I would even put reversal immediately above. I think I have a spelling mistake. Let me go fix that. That's reverse and correct. Always works. It undoes a transaction first and then redoes it the correct way. I would say that this leaves the best audit trail out of all of them. It is the one that I personally use when I make mistakes. It leaves a great audit trail. It shows the original error being reversed, zeroed out, and then it shows the way it should have been done in the first place. Now, I think I may have saw something in the chat room, possibly. No? Okay.
No, but Ulysses has his hand up.
Oh, maybe that's what I saw. Okay, Ulysses, thank you.
Okay, I had a question. Every time I put a date such as June 30th, I get it autocorrects to a number.
Yes. Yes. So Excel changes dates into numbers to do transactions with them. So to keep that from happening, Ulysses, hit the space bar first and then type in June 30th. And that will keep it from turning that date into a formula.
Okay, thank you.
You're welcome. Anybody else? All right, then Ulysses, you can hit that hand to take it down, unless you got another question. And if you do, just unmute yourself. All right, here's what I think is probably the toughest problem in chapter 4. It's, I think, your last problem. So we're going to spend a little bit of time on this. I did get probably 4 to 5 emails over the course of the weekend on this. So I know that this was a source of confusion. And that's the great reason why I love it when you guys try your homework over the weekend, so that I can come back in class and make this a little bit more clear. So this problem only asks us to do correcting entries. Okay, so it says all the journal entries shown below contain errors. The errors were prepared by an employee of Helena Corporation who does not have an adequate knowledge of accounting. So they got somebody in there that probably doesn't have the necessary education. Or they have a student in there who makes mistakes. We all make mistakes. So let's read through this. And I think I might have put the descriptions down here twice. I think I have the directions down here twice. That's okay. I'd rather do it twice than not at all. So let's read. Examine the journal entries carefully to locate the errors. So step 1, locate the errors, and then prepare journal entries to correct the errors. Assume that on that last exercise, that last journal entry, the items for office supplies and office equipment were recorded at the correct value, but the items were purchased with cash. So I'm going to remind myself on that third entry that it was a cash purchase. Okay, so let's look at these 3 entries, and they're going to ask us to do 2 things on this one. They're going to ask us to do the correcting entry, and then they're going to ask us an analyze question. And Ulysses, I think I saw your hand go up. Go ahead.
How do we get that image right there with the general journal?
It should be on the second tab. So exercise 4-5 was the first one. It should be on your second tab.
Oh, okay. Found it. Thank you.
Okay, you're welcome. So glad you asked, because there's probably other people out there wondering the same thing. So it's on the second tab. So we're going to do 2 things here. We're going to locate the error and fix it. And then this analyze question is what threw a lot of students off over the weekend. Those analyze questions really kind of are brain teasers. So we're going to do both. So let's start off by looking at the first one. If you look at the description, this one says performed services on account. Okay, so we perform services on account. Well, here's the mistake. Accounts payable should not have been used. What should have been used when we perform work on account, GAP says you record revenue when earned. They did record the revenue, but their debit was to accounts payable. It should have been to accounts receivable. Okay, so that's our first mistake. They used accounts payable and they should have used accounts receivable. So let's go fix that. Okay, it says that we discovered the errors on the last day of the month. So the first thing we're going to do on this date over here is we're going to date it. We're going to date it 2000X1. And then this is January 31st was the date it was discovered. So on this one, what we need to do is credit accounts payable to get that 1100 out of there. But since we have to list our debit first, we're going to debit the proper account, which is accounts receivable. So here's the correction. A debit to accounts receivable for $1,100. The credit would go to accounts payable to get it out of there for $1,100. And a brief description. You definitely want to leave a description that's going to catch an auditor's eye, because we never make an entry like that. We never use accounts receivable and payable in the same transactions. They're polar opposites of each other, except when we are creating or fixing errors, when we're correcting errors. So let's put a decent description to correct the transaction on January 1st. I think that was on. Let me go double check that. Yes. On January 1st, where work performed on credit was accidentally charged to accounts payable. Okay, and again, if Giselle was to type in a description, hers would be different from mine. And if Maria was to type in a description, hers would be different. So Connect does not have a way to check the descriptions. That's why they don't have you writing them in. But again, what we're doing is we're leaving a solid audit trail. And if that's not a word in your vocabulary yet, we want to get it in there. We want to leave a good audit trail. That means somebody can come behind us and follow the work that was done with minimal disruption. So we're done with the first one. We're correcting errors. Unless you guys have questions. Ulysses, I'm not sure if you had another question or if I just noticed that your hand was still up. You're good? Okay. All right, next one then. Paid for the January telephone service. And what they did is they flipped the transaction, right? When we pay for service, we should be crediting cash, and they debited cash. So this one threw a lot of people for a loop this weekend because we hadn't yet talked about it. So what I would encourage on this one is to put little T accounts up here to properly get how to fix this one. So here's what happened. They credited cash for $750 and they credited this telephone expense for $750. Let's see, got that backwards. They debited cash and they credited telephone expense. So that's what they did. So how are we going to fix this? Well, there's several ways to do it. I think what's easiest on this one is the reverse and correct technique. You could do it in one journal entry, but I think this one is going to be best understood if we do the reverse and correct. So let me do the reverse first. I'm going to change my pen color, and you guys can change your color by going up to draw. I'm going to hit the red button here, like Giselle showed us. So to get rid of this, I'm going to do the opposite in red. I'm going to do the opposite. And what that does is it takes it down to 0. So I debited telephone expense and I credited cash. And now both of those accounts have a 0 in it. So let me write that down, what I just did. It's still on July 31st. So what I just did in red is I debited telephone expense and I credited cash for $750. Now I'm not completely done. What I've done is reversed out the original entry. To reverse out the entry, I'm going to put a date when that was done as soon as I go grab it. On January 2nd, that recorded the payment of the phone bill backwards. Okay, so I'm not done. Because right now, if you look at my T accounts, I have nothing in my telephone expense and I have no effect on cash. I need to do it one more time to get the entry in there correctly. So now that I've zeroed these out, I'm going to get another color. I'm going to get a green color. Oops, I did not mean to do that. Let me hit Control Z, hopefully to get out. Somehow I just got a help menu up here that I don't want. Let me log out of that. Let me get my screen back. Oops, I made a mess. Let me get my screen back to normal here, normal size. Okay, let's try it one more time. Let me get my green. Oh, that did it again. Control C. Forget the green. I don't want to mess with a screen being a different size. We'll go ahead and I'm afraid to try that green again. Let me try a blue and see what happens. So now to fix this, I'm going to do what I should have done in the first place, which is a debit to telephone expense and a credit to cash. And let me show you what that's going to look like. I need to make this bigger so I can see it. A little bit of technical issues here. Sorry about that. Telephone expense and a credit to cash, and that would be to correct the error after the reversal above. Okay, let me get that in there. Now, some of you might be saying, well, what if I wanted to do it in one entry? Okay, you could do this in one entry. You'll notice that if I take these two and I combine them, you could have made this in one big entry, which would have been for $1,500 debit telephone expense and credit cash. Why would you double it? Because remember, they flipped it. They did it the opposite way. So just doing it once takes it back to zero. Doing it a second time gets it in there the correct way. So any questions on that? Okay, not hearing any questions. Let's take a look at this last one.
Professor Johnson, you forgot to include the date.
Oh, yes. Well, yeah, honestly, Giselle, I didn't forget, but we can put it in there because it is January 31st. You don't have to, but it's a good idea, especially for demonstration purposes, to date them all. Okay. So you're right. Let's go pop that date in. But if we didn't want to put that date in, we assume that the date above continues. But that's a very good point. Any other comments, questions before we take a look at that last one? Okay, now when I looked at this third one, I thought, well, that looks okay to me. But when we read the directions, they mention that those items on the last transaction were purchased with cash. Okay, not on account, but with cash. So the error is right here. The accounts payable is the error. And so we need to fix that. It should have been cash. Since account payable was credited, what we need to do to get that out of there is we need to debit accounts payable. So let me drop my date in here again, January 31st. I would want to debit accounts payable, and then the credit should have been to cash. So that's going to be the account I credit. The debits are fine. They were okay. They were properly recorded. So again, I want to leave a really good description. Whenever you make an error, you want to leave a really good description. And that was on the 3rd to correct the transaction on 1/3 where, what were those items? Where office equipment and office supplies were purchased using cash. So those are our correcting entries. Errors always cause problems. And again, that's why my accounting instructor, me walking in so proud of myself for not making errors, that's why he took my disk, at the time they were called floppy disks, and purposely made mistakes because he wanted me to have the experience of correcting errors. And I get that. I get how important of a learning exercise that was, because errors can cause problems. They make you think backwards. And so the analyze questions are always the big brain teasers. So, and I noticed when I went in and looked at the homework on chapter 4, most of the 10 people that finished it had mostly gotten 10s, but the little portion of a point that a few people missed was on this question. So I wanted to make sure I went over it in class. It says, after the correcting entries have been posted, what effect do the correcting entries have on the assets? Okay, that was very specific in the analyze. They want to know, what effect did those errors have on the assets of our firm? Okay, there's lots of ways that you could do this. You could write out the accounting equation if you wanted. In other words, you could write out assets equals liabilities plus equity. And then anything that affected assets, you could put under this category and that would do it. Or you could use a big T account for assets. However you want to do it is fine with me. I think just because it's a little bit neater, I'm going to make a big T account off to the right here. And I'm going to call it just assets. Anything that affected an asset account, I'm going to put in this T account. So I'm going to call this all assets. So that's, remember what the analyze question said. What effect did those corrections have on the assets of the firm? So what we're going to do is we're going to go through these transactions and we're going to highlight or focus on just the assets to get that analyze. And let me write that down. We are answering the analyze question, the brain teaser at the bottom of this. So I'm going through these correcting entries and I'm going to highlight any type of an asset. So here's my first one. I'm going to highlight that. I'm going to make it yellow. The way you do that, if you're interested in Excel, there's a little fill button here, color fill. So you highlight and you choose, I'm going to use the highlight color. And I'm going to go through here. And right now I'm zeroing in on my assets. So I have accounts receivable. I know that cash is an asset. So I'm going to make sure to pick that one up. And here's another asset, that other cash account. And if I scroll down, here's another asset, cash account. So they want to know what was the effect on assets. So I've highlighted 4 assets on here. If I put those in my T accounts, I should be good. I should be able to answer the question. So my first one was an $1,100 debit to accounts receivable. That's an asset. I'm going to put that in my T account. My second one was a $750 credit to cash. My third one was a $750 credit to cash. And my last one down there was a $1,500 credit to cash. Well, if I foot that T account here quickly, we foot that T account, that will answer the question, what effect did that have on my assets? Well, you might be able to do this in your head, but just in case you can't, let me let Excel do the math for me. I'm going to add up all the items on this side and then take out anything on this side. You guys can just use your calculators if you'd prefer. I got a 1,900. Remember what assets look like, plus minus. So the net effect was a decrease of 1,900 to assets. That's my answer to that analyze question. The effect of those correcting entries was a decrease of 1,900 or 1,900 to the assets. That second half of chapter 4 with those errors tends to be a little bit more difficult. And Ulysses, I think I saw a question.
How do you add up the sums in Excel?
Okay, so let me do that. I'm going to go back here. So what you do is you type the word equals and then SUM. And since I can visually see that my credits are more in this case, I'm going to do those first. So equals sum, hit the open parentheses and highlight from the top to the bottom like I'm doing right here. And then close the parentheses. So what we've done is we've foot the left-hand side so far. Then I'm going to put minus. I'm going to do the same thing with the right-hand side. Minus the sum. Open the parentheses. And I'll choose from the bottom to the top again. So that's what my formula looks like. Your formula might look a little bit different depending on where you made your T account. Once I press enter, I'll come up with a 1,900. So let me show you the formula one more time. It's up in my formula box. Basically, I'm summing up the credits and then summing up the debits and subtracting them. Hope that answered it for you.
Yes, I just got the wrong answer when I did it. I think because I put the 750 and the cash together.
Okay, you should have it now though. Were you able to get it on the second try?
I'll give it another try and I'll
Okay.
let you know, okay?
Okay, no problem. Anybody else have any questions on the correcting errors? Okay, then I think we're ready to go on to a more difficult chapter for most, chapter 5, which I asked you guys if you possibly could to read it. So before I leave chapter 4, any questions on journalizing, posting, doing a trial balance, or lastly, these errors that we talked about today?